Greetings traders, welcome to the weekend edition. And the first thing I want to show everybody here is this past week, financials did the very best at 3.3%. Conglomerates up 1. Just to let you know that conglomerates are companies such as GE that own a whole host of different type of businesses. And then you have utilities and basic materials all in the green. Healthcare, not too bad, and then we just went down from there. Industrial goods and technology absolutely doing the worst. But the bigger picture for the month, utilities doing the very best out of the group. Healthcare next in line. It's great to see financials taking the big hit, but we did for the week bounce back. As you saw in previous videos, we had insiders in the different banks buying aggressively, and I showed that to everybody. And here we're looking at the S&P daily. We're going to look at all the major indices and their weekly and monthly. So take special note, get a pencil and paper, and let's see what's happening. As we've talked about, we have a symmetrical triangle on the S&P. Symmetrical triangles can be bullish or bearish, but because of how the triangle was developed, we think this is more bearish than bullish. The line that we have for the last two swing highs, had a user FTV actually turned me on to this, that we have a swing high there, coming down, a swing high here, and another swing high, making this a very prominent resistance point. So here we have, we're zooming in here, and we had a big down day today, and we knew that was coming. Now the question is, will we blast through here? Well, Monday is going to be a very telling sign. We're staying on the zero side of the MACD line, or they're on the bottom side of that zero line. We have support here at this red line, which we hit there, and there, and there. Should be support. We have a major support coming up here. So will we hang up there? Maybe. Monday could be one of those indecision days that we just hang up and we could get a bounce. But something tells me we'll hang up there and then crash through. I don't think we'll get into the apex of this triangle. I think this is the time that we will come through and start testing these areas. I think that we'll get to 775. I think we'll get to 800 very fast. Either Monday or Tuesday we'll be at 800. That's my gut feeling. But that's only if we close lower than these two areas. Very important that we close below those two areas. And for us to get we would need to get a close below 815, 813. If we could get a close below 813 on the S&P, that would be very bearish, and we should start dropping, testing this 800 mark, which I do think will go through. 775 should hold because we have major support here on this till line coming down, and then the red line that goes back to 2002, 2003 lows. And here's our big 750. Woe to us if we go below 750. Now let's bring in the weekly chart. Here's the weekly chart on the S&P. What we have here, let me draw a couple lines. And this is a weekly chart. We got a line coming down like this. And let's do there to here. Yeah, very nice. You know, just kind of a downtrend. I'm going to open this up just a hair. Yeah, downtrend, but we hit floor, ceiling, or support, ceiling. But look how we're staying up at your resistance. This is a bullish move here. We did not drop back down to support. Now we do have a fake out. What does that mean? We had a pullback, lower high, higher high, higher low. We do have an up candlestick, even though it's red. This is kind of either a shooting star type formation or a what would be called a gravestone doji. We hit resistance, it came right back down. So, but here's the bottom line. We're staying up here near that resistance. We could pop through. Now here's the monthly chart on the S&P. The S&P, we just come crashing down. We're at the 800 mark. We're at this area where we were 2002, 2003. We're at those support areas. We have some lower shadows here. That's bullish pressure. It would not shock me if we found support right there. So the question is, are we at our lows right now? Well, let's go deeper. Here's the Dow. The Dow also has given us on the daily chart a symmetrical triangle. But zooming in here, this is ominous. We closed lower than this trend line. And if we zoom in a little more, support, support. We closed below it. We closed right at 8,000. I don't like that we're below that trend line. 8,000 is holding up at this very moment. The key is, will we go lower on the daily? So what I would be looking for here is a close below 7948, a close below 7950. 7950, if we can get a close below that, that would be very bearish, and we should just continue on down. Here is the weekly chart on the Dow, and we coming down. Same thing. If I were to draw a couple trend lines on this, right here and here, and then coming across. Now this one's a little more bearish, and what we have is a descending triangle. Descending triangle. Descending triangle is very bad, and these are more bearish than they are bullish. So the weekly chart on the S&P showed to be more bullish and bearish. However, the Dow is showing to be more bearish than bullish, just off of technical analysis with the descending triangle formation. Here is the monthly chart on the Dow. We have these areas back in 2002, 2003 drawn across. We've been, last 2 months, we've been staying between these two areas, so we're in this little trading range between them. And but 8,000 should act as a support area, and that's precisely where we're at. But we better not go lower than these areas. And let me show you that area right there, 75.88. If we get below 75.90 areas, things could get really, really bad. But I'm suspecting here that these areas right here where we're at right now should start acting as our lows. The question is, will the 2002 and 2003 areas be easily penetrated? I do not think so. So here is the NASDAQ. And as you see here, I've drawn a couple lines: resistance, support, resistance, resistance. Anytime you get a chance to extend your trend lines out for them to make sense, the more valid your trend line is. So we have support, support, resistance, resistance. So those are how we came up with those two trend lines. And there we are. We're just in a defined downtrend. This is where you should have shorted a couple days ago. We come blasting through these moving day averages. We should head down to this lower area, making yet another lower low, swing low, lower swing low. But 1450 should act as support, so I would expect us to get to about 1450 on Monday. And here's the weekly chart on the S&P. The weekly chart looks very bullish. Why? Because we have a falling wedge. Falling wedges are in fact bullish, and much like the S&P, we're hitting resistance, hitting resistance, hitting resistance. We popped through resistance this week, came right back down. So what's happening at this moment is we're knocking at the door to break resistance. I do not see this heading down to this lower line. So both the weekly S&P, the weekly NASDAQ looks very bullish to me. Here's the monthly on the NASDAQ. We had a big symmetrical triangle. You can see it right there. We come breaking down. Now the question is this our lows? We dropped 1, 2, 3, 4, 5. It's due for a bounce right now. We have these lower shadows, but technically speaking, we have what looks to be a bearish pennant. Bearish pennant on the monthly chart was where you get this little triangle type pattern at the low. A bearish pennant is very bearish. So we have the weekly very bullish, we have the monthly very bearish, and we need to make sure we do not break these lows. If we break below, I would say 1370s. If we get below 1370 on the NASDAQ, woe to the markets. Last but not least, let's go to the Russells. And the Russell's a big symmetrical triangle. We're at major support. Will we break through? If so, we could really crack. There you have it for free trading videos. We'll catch you next time. Happy trading.